Ever wondered how people make money in the stock market? Don't worry. We're going to explain it and also explore its fascinating evolution from ancient bartering to today's fast-paced digital marketplace. By the end of this, you'll have a clear understanding of how the stock market works and how it became such a powerful financial tool. Let's start from the very beginning. What is the stock market and how does it work? The stock market is like a giant online shop where you can buy tiny pieces of companies called shares or stocks. When you buy shares, you own a small part of that company. Imagine if you bought a small piece of your favorite snack company. You own part of it, and if the company does well, your share could become more valuable. To buy or sell stocks, you don't go directly to the company. Instead, you use something called a broker, which could be an app or website. Think of it like an online store. You tell the app what you want, and it does the rest. Brokers help you buy and sell shares in a simple and efficient way. Stock prices change because of supply and demand. If many people want to buy a stock, the price goes up. If lots of people want to sell, the price goes down. Essentially, stock prices rise when the stock is popular, and they fall when fewer people want to own it. People invest in stocks because they hope the company will grow. If the company becomes more successful, the stock might become worth more, and you could sell it for a profit. Also, some companies share part of their profits with stockholders through a dividend. It's like getting a little thank you gift for owning part of the company. However, stocks come with risks. If the company doesn't do well, the price of your stock can drop, and you could lose money. So, while the stock market offers opportunities to make money, it's important to remember that it also involves risks. One way to reduce risk is by owning a variety of stocks. This strategy is called diversification. By spreading your investments across different companies, you reduce the chances of losing everything if one company performs poorly. It's like not putting all your eggs in one basket. Now, let's explore the fascinating history of the stock market and how it evolved to become the powerhouse of global finance that it is today. Before money, there was bartering, a system where people exchanged goods directly. For example, you might trade wheat for livestock or tools for fabric. But what if the person you were trading with didn't want what you had? This inefficiency led to the creation of money. The first coins were minted in Lydia, modern-day Turkey, around 600 BCE, made from gold and silver. This was a game-changer because people now had a standardized way to measure value, making trade smoother and setting the stage for investment. With the invention of money, people could save, invest, and fund larger ventures, like trade expeditions and infrastructure projects. As civilizations grew, so did business opportunities. In ancient Rome, wealthy individuals, known as publicani, would invest in ships that went on trade expeditions. If the ships returned safely, the investors shared the profits. If not, they lost everything. This was one of the earliest forms of investment risk, a concept that remains central to the stock market today. Fast forward to the 12th century in Venice, where merchants needed capital to fund expensive trading expeditions. They created partnership contracts, early versions of today's shares. Meanwhile, the Venetian government issued bonds, official debt instruments where citizens could invest in the government itself. This idea of raising funds through public investment would later be adopted worldwide by countries and companies alike. A major turning point came in 1602 with the creation of the Dutch East India Company, the world's first major corporation. The Dutch East India Company was a massive trading company dealing in spices, silk, and other goods from Asia. Its voyages were risky and costly, so the company sold shares to the public. This allowed investors to own part of the company, and in return, they received a portion of the profits. This introduced the concept of dividends, where shareholders earn a share of the company's earnings. The Amsterdam Stock Exchange, founded in 1602, became the world's first official stock market. This marked the birth of the modern stock market, and soon after, other cities like London and Paris followed suit by creating their own exchanges. In the 1700s, London became a financial hub, with traders gathering in coffeehouses to exchange stocks. One of these, Jonathan's Coffee House, eventually became the London Stock Exchange in 1801. As the Industrial Revolution began, businesses needed more capital to expand. The stock market became the perfect solution, allowing factories, railroads, and banks to raise the funds they needed. In 1792, 24 stockbrokers signed the Buttonwood Agreement, which marked the beginning of the New York Stock Exchange, NYSE, today's most famous stock exchange. By the late 19th century, the NYSE was booming, with companies like General Electric and Ford going public. However, the stock market hasn't always been smooth sailing. The Great Depression of 1929 caused the worst economic crisis in history. Stock prices plummeted, banks collapsed, and millions of people lost their savings. But the market bounced back, and post-Webb Yaws, the 1950s and 60s saw a boom in stock prices, helping to fuel economic growth in the US and Europe. The dot-com boom of the late 1990s brought a surge of tech companies to the market, but many collapsed in the early 2000s, wiping out billions of dollars in value. Then, the 2008 financial crisis, triggered by risky banking practices, sent the global economy into a tailspin, with stock markets crashing and leading to a recession. Today, with the rise of high-speed trading, cryptocurrency, and global markets, the stock market has become more accessible than ever. Thanks to technological advances, anyone with an internet connection can buy and sell stocks in real time, allowing individuals to participate in this powerful wealth-building tool. One of the biggest changes to the stock market in recent years has been the rise of online trading platforms and apps. These platforms, like Robinhood, E-Trade, and TD Ameritrade, have democratized access to the stock market, allowing everyday people to trade stocks with just a few clicks. This shift has made investing more popular, and more people are now taking part in the market than ever before. With the introduction of commission-free trading, many investors are diving in, eager to take advantage of the opportunities that come with stock ownership. Moreover, the growth of exchange-traded funds, ETFs, and mutual funds has also made it easier for individuals to diversify their investments. These funds pool money from many investors and invest in a collection of stocks or bonds. By doing so, they offer a way to spread out risk and give people access to a broad range of investments without having to pick individual stocks. ETFs and mutual funds have made investing even more accessible for people who don't have the time or expertise to manage their portfolios actively. So, why is the stock market important? It helps businesses grow by allowing them to raise capital. It creates wealth and financial security for investors. It drives innovation, and it connects economies worldwide. For example, if you had invested just $1,000 in Amazon in 1997, it would be worth over $1 million today. To sum it up, the stock market allows you to buy pieces of companies, with prices rising or falling based on how popular a company is. You can make money when companies grow, but you also face risks when they don't. Always remember to make smart, informed decisions and be patient. In recent years, the stock market has seen the rise of new trends and investment options, such as the boom in social media-driven trading. Platforms like Reddit, with forums like Wall Street Bets, have played a key role in pushing certain stocks to unexpected heights, often through collective action among individual investors. This shift has brought more attention to the power of retail investors and how they can influence stock prices. These new developments have made the stock market more dynamic, with a greater influence from younger, tech-savvy investors who are challenging traditional Wall Street strategies. Another important development in the modern stock market is the rise of environmental, social, and governance (ESG) investing. ESG investing focuses on companies that meet certain standards related to sustainability, ethical business practices, and social responsibility. Many investors today are looking beyond profits and considering the broader impact of their investments on society and the environment. This trend has led to a rise in ESG-focused mutual funds, ETFs, and stocks, offering individuals the opportunity to invest in businesses that align with their values. It's a growing movement that has the potential to shape the future of investing. Finally, as the stock market continues to evolve, the role of artificial intelligence, AI, and machine learning has become increasingly important. Today, sophisticated algorithms can analyze massive amounts of data in real time to predict market trends, automate trading, and help investors make better decisions. While AI can offer insights and help reduce the risk of human error, it has also raised concerns about the potential for market manipulation and the need for stronger regulations. As technology continues to advance, the relationship between human traders and AI will play a significant role in the future of the stock market. That's how the stock market works. From its humble beginnings to the dynamic, fast-paced system we see today, the stock market has come a long way. If you're interested in investing, make sure to do your research, diversify your investments, and be prepared for the long haul. Thanks for watching. If you found this helpful, don't forget to like and subscribe for more easy-to-understand financial tips. See you next time.
Stop everything. Did you know that a cow was just sold for a jaw-dropping $4.8 million? That's more expensive than luxury mansions, supercars, and even private islands. Meet Viatina 19, the world's most expensive cow, and trust me, she's no ordinary farm animal. What makes her worth millions? Stick around, because this story will blow your mind. Deep in Brazil, a legendary bovine has shattered records. Viatina 19, a Nelore breed cow, has been crowned the queen of cattle with a mind-blowing price tag of $4.8 million. But wait, what makes her so special? Is she golden? Does she produce diamond milk? Nope. But she does have something far more valuable, genetics that could change the future of farming forever. Viatina 19 isn't just big, she's huge. Weighing in at 1,101 kilograms, she's double the size of an average cow. Her sleek white coat, loose skin, and powerful muscular build make her the ultimate beauty queen of the cattle world. In fact, she even won Miss South America at the Champions of the World competition. Imagine a Victoria's Secret model, but in cow form. Her bloodline is pure gold in the cattle industry. Nelore cows, originally from India, are prized for their heat resistance, disease immunity, and powerful build. In Brazil, they are the backbone of the country's multi-billion-dollar beef industry. But Viatina 19? She's the elite of the elite. Farmers are paying millions just to get a piece of her genetics, literally. Her eggs will be sold worldwide to create the next generation of super cows. Think about it, this isn't just a cow, this is a genetic goldmine. If one of her embryos produces another elite calf, it could be worth millions in beef production and breeding rights. This is the livestock equivalent of owning a Picasso or a rare Ferrari. With her Guinness World Record, Viatina 19 has changed the cattle industry forever. She isn't just a cow, she's a legend. Future farmers will be chasing her genetics for decades to come. The question is, will we ever see a cow worth even more? This story proves that farming isn't just about cows and milk, it's a billion-dollar business where genetics are worth more than gold. What do you think? Would you spend $4.8 million on a cow? Let me know in the comments. And hey, if you enjoyed this mind-blowing story, smash that like button, hit subscribe, and stay tuned for more insane real-life stories. See you in the next video.